think the markets are far too complacent about how big this is and how serious an effort this is. This is an idea whose time has come again. The demand scenario could scarcely get better, but somehow it seems every day there's some new announcement that makes it even better. And the supply is not coming online as feared. So if you're wishing that this is it, that silver is going to the moon right now, you're wishing, at least statistically, for the end of the cycle.
Hey guys, so today we have a very special guest, Lobo Tiggre, the founder of Independent Speculator. And today we will discuss the state of the overall economy. We'll go into the commodity sector by discussing gold, silver, copper, uranium, and a lot of other very interesting things. So Lobo, thank you very much for being here.
Happy to be on the show.
Thank you very much, Lobo. So I would like to begin our conversation by talking about, of course, the state of the macroeconomy. So we have so much going on right now. A few weeks ago, we had the big Jerome Powell admission. We have the copper tariffs now. So what's on your mind and what are you paying attention to?
Well, I should say first and foremost, people pay me to kick rocks and evaluate what may or may not be in them. And I'm not an economist. I don't even play one on TV. But I do comment because people ask and because, frankly, mainstream economics is so often so wrong. I mean, their models don't even allow for the possibility of stagflation, which we're seeing break out around the world. So you can't trust the mainstream economist. You have to think for yourself anyway, as an independent speculator. So sorry, but I just think that's important because people ask me these questions and, I'm just this guy, like anybody else out there trying to make a buck, honestly. Anyway, so the big macro themes on my mind are that Trump shock, by which I don't just mean tariff noise or Trump, bombast. I mean the agenda that's emerging from all the different things Trump is trying to do, which is transformative. He isn't just trying to reindustrialize the United States, which by itself is huge. I perceive his activities to be, I call it Fortress America. It's not just America first, it's Fortress America first. The things that he's focused on are all what Doomberg calls military adjacent. And I think the agenda here, it's not just about, 1950s and 60s style manufacturing jobs. It's about America being able to make its own tanks, not needing China for its high-tech gadgets, and so on. And so keeping America on top in the 21st century. Now, whether you agree with his agenda, you approve of it or not, it's not the point. The point is it's there, it's big, it's huge, and he is quite clearly willing to put America through a significant amount of pain while promising wonderful things in order to get there. And this has implications for the entire world. As a commodity speculator, anything that impacts the dollar is obviously important. Commodities tend to be quoted and traded, and futures, are all dollar influenced. So that matters. But the US is also still, by some measures, the largest economy in the world. So retooling the US economy impacts the global economy. Long-winded way of saying Trump shock, I think, is real. I think the markets are far too complacent about how big this is and how serious an effort this is. And even if we've reached peak tariff noise, which I'm not even sure is true, we've seen, there was so much relief after April 2 was walked back, but now July 9th is gone and tariff rates are being talked about that are comparable or in some cases even higher than April 2. And yet the markets seem to be fine with this. I think that's a mistake. And in that world, this is where we want to embrace the practices that my friend Doug Casey used to call make volatility your friend.
Yes, that's very interesting, Lobo. And what effect do you believe that will have on the commodity sector, if any?
Twofold. I think it's a win-win for monetary metals, safe haven assets like gold. Clearly, instability, chaos, change, that's all good for gold. The inflationary side of it, not just the big, beautiful act now, not bill anymore, but the trillions and trillions of dollars with the debt ceiling just blown out of the water for a presidential term. That is hugely inflationary, but don't worry, we promised to cut spending later. And it's not just the United States, Europe remilitarizing, in Germany lifting the debt brake. This is huge. In China, they've also gotten more aggressive with their multi-stimuli programs to try to combat the changes in the world. All paths lead to inflation. There is no case here that I think results in any real durable deflation. You might get a deflationary spike and some shock. And yes, I get the idea that there could be recession as a result of all this tumult, and those tend to be recessionary. But the printing press is the more powerful force. And with the governments already throwing money at the problem, the helicopters, the money helicopters, I like to say, they never landed after COVID lockdowns. They're still been in the air, multi-trillion-dollar spending programs galore. So all paths lead to inflation. The threat of a recession would just lead to more money helicopters. And so I don't see a deflationary recession or depression. I would see the worst case scenario would actually be stagflation on steroids, not just weak growth, but recession and inflation at the same time. That's actually possible, even though the mainstream would not want to even contemplate the possibility. So that's bullish for safe haven assets, monetary metals, no matter what. In due course, the all paths lead to inflation. That's bullish for all commodities, particularly the critical minerals, the ones that are necessary for this military adjacent agenda I'm talking about, all those things, and most especially the ones that are in short supply. So, sorry, but the takeaway here is bullish, but near-term scary for those other minerals and metals. I don't see any reason to pile into the oil patch right now at all with what's going on in the world and OPEC trying to ramp up production. And even copper, which is facing a structural supply constraint, uranium as well. But copper is my favorite industrial metal going forward. And I'm not buying it, even though it just, tariff news took it to a new all-time high in the US, because that Trump shock isn't done yet. And, it's called Dr. Copper for a reason. And I think this spreads to all industrial minerals and commodities. If you think that Trump shock will be benign and everything will be great and all the spending is just going to result in the inflation and a reflationary boom right now, well, then you probably want to go long already. But if you think that Trump shock and the adjustments that we're going through are going to cause some pain, some recessionary pressure, then you probably want to hold off for a buying opportunity. And that is what I am personally doing with my own money.
Yes, it's interesting because sure, we want to know what's going to happen with the economy, but if we think about it for the long term, it doesn't even matter that much. Sure, we can get better entry opportunities, but the wave is there, and it's really difficult to see anything really breaking it.
You're being very polite in your pushback there. You're right. But as an evil scum of the earth newsletter writer, as I lovingly describe myself, with 20,000 people looking over my shoulder saying, "What have you done for me lately?" If I say, look, copper is going up for decades and don't worry about it, just buy the best copper stocks, stick them in a drawer, forget about them. You'll be glad you did 5, 10, 15 years down the road. Aside from the fact that, the mining industry is so scary that even the biggest and the safest, even the biggest companies in the world are subject to sudden, reversals or major surprises, unpleasant surprises. That aside, yeah, I could actually see that argument. Like you say, if you have a long-term view, which is accepted by most investors as being essential to returns over time, I get that. But if I say that, and, it turns out that Trump shock puts the United States in recession this year, and we did have a negative Q1 GDP print, by the way, right? If things get really scary in the near term, copper prices retreat. And by the way, that all-time high copper price, that was just in the comics in the US. The London price, the last time I saw, is lower now than it was a year ago. So it's just not true that Trump tariffs for copper mean higher prices and yay, all copper companies are all going to make lots of money. If you're mining copper in Peru and shipping it to China, Trump's tariffs make no difference to you at all. So, buyer beware here. Caveat emptor is one of my favorite sayings. And it's as a public figure, not a private investor. As a private investor, I could follow that plan you just mentioned with more comfort. As a public figure, if I say, yeah, don't worry about it, it'll be fine. And, over time, and we get a big kerfuffle, that buying opportunity does show up. A lot of people be angry that we missed the buying opportunity. B, a lot of people who bought high will sell low. They'll think, oh, there's something wrong. Copper's wrong. It's betraying us. And they'll sell and they'll invert the formula. They'll buy high, sell low. And then they'll be too burned and gun shy to get back in again when, the coast is clear. So as a public figure, it's very dangerous for me to say, yeah, just think long term. Don't worry about what happens next. It's going to be great. Right? That can hurt a lot of people. But it's not just that. It's also just, I think it's likely. I mean, I don't know the future, as you just said, none of us do, but I do think it's likely that Trump shock is going to cause more turmoil. This is one of my opening statements that you asked for. I think the markets are far too sanguine for how smoothly this is going to go. And therefore, I do think that it's not just a 50-50. I think, who knows what the odds are, but I think the odds are in the favor of lower entry points ahead. Remember, London copper prices is lower than it was a year ago, right? So yeah, watch out for the, flash and mirrors, focus on the fundamentals. And on that basis, as a fundamentalist, I'm inclined to wait for better buying opportunities. And you know what? If I'm wrong, Vladyslav, if I'm wrong, I'll have to pay a bit more. But that, 5-10 year long-term outlook, it's still there. I'll still make money. So I'm not trying to time the market here, but I just, I'd like to have confidence that this buying opportunity is more likely behind us or a no-show.
Yes, that makes sense, Lobo. And so let's go back to gold and silver. So gold performed quite well, of course, if we look at it objectively. And the miners, however, so in my opinion, there are bigger opportunities in the miners than the metal itself, because the metal doesn't really have to go up. But if you look at miners, some of them underperformed. And if you look at the ratios, the historical ratios and everything, they look quite cheap. And the good companies are printing cash, at least the best ones do. So what's your view on gold and gold miners, and where do you see the opportunity right now?
Yeah, I think, the good news is that if, like me, you're excited and happy to see gold, real money getting recognized. The banks are calling it a tier one asset. Central banks around the world are buying it, which I do think is an absolute game changer. And things that would have not gold back harder before are not doing so now. And it's remarkable that gold has held really 3,300 seems to be about the new floor here, which is an extraordinary level. And for the miners, as you say, they're the ones who are not totally incompetent, even the mediocre ones, are printing cash at these levels. I mean, a year ago, a crappy mine needed $2,000 to make money. And here we are, $1,000 plus an ounce over that. So what I'm saying is, if like me, you're a little bit reluctant to buy something that has just hit an all-time high, and by the way, that $3,500 gold high, if you adjust for CPI, matches the 1980 high. So that's a pretty significant number. It's good that there's something else related that's still relatively on sale. And my friend and fellow Puerto Rican, Adrian Day, does a good job of outlining this. If you take something that's riding high on a nominal basis, a gold company, but you adjust it for the gold price, or the gold dollar exchange rate, as I call it, which isn't just, being ideological about gold is real money, though I do believe that. If you're a gold producer, then the gold dollar exchange rate is highly material to your business. It really is a better yardstick than any funny little green or red or blue pieces of paper that we call money these days. And if you look at the producers in terms of gold, many of them are actually quite cheap. So this is good news. This is great, because if you don't want to chase something that just hit an all-time high, then you can find something that's related, that's cheap, and gives you a credible, compelling value proposition. I think that's fantastic. So that said, I do think this is a stock picker's market. I would not buy an ETF and just hope the whole basket will go higher, because as we've seen in recent years, that you specified in your question wisely, the better companies, they're doing great, but the not so good companies are not. And we've seen a huge divergence between the haves and the have-nots, if you will, here. And so I do think stock selection matters. Maybe I'm just patting myself on the back here because that's what I do. I kick rocks and pick stocks. But I do think this is really true in this environment. And the one thing I can say without giving away stock picks, which I don't do, dear audience, is if you have a stock and gold went to 3,500 and your stock didn't move at all, the market is telling you there's something wrong with your company. So that's, if something is dirt cheap now because gold's gone up and the stock hasn't gone up, that's not necessarily a buy signal. That's actually a red flag. What is wrong with this company that it hasn't moved at all, despite, what are really amazing gold levels for the actual business of mining this stuff. I think that's very important. That's a litmus test that should be applied. There are some that, for various idiosyncratic reasons, they were discounted by the market. And you see that they are starting to move, like the higher gold level has been material for them. I think that's more interesting. But if it's done nothing, if it's just flatlined, it's deadlined, and nothing gold does moves it, why do we want to own this or speculate in it?
For sure. And Lobo, before we move to silver, I would like to ask you, so, usually people talk that during the bull markets, money sort of trickles down from the metals, then to the large companies, the mid companies, then the juniors. Do you have a certain stage that you are more interested right now at this specific stage? Maybe it's developers, maybe it's juniors, or do you just analyze individual companies and you don't really think about it in that way?
I understand a little bit of both. I mean, it sounds kind of crazy, but I think of myself as a value speculator. So I'm looking for a compelling value proposition in any metal. If I like the commodity and I want to go long, I'm looking for a value proposition. There are some types of trades that I like almost no matter what. The pre-production sweet spot is my claim to fame in this space. As far as I know, I'm the first one to actually measure that. And the gains there are both probable and substantial. The problem is there aren't many of those per year. And I'm not talking about anybody builds a new mine. It has to be the transition from exploration to production, which gets a re-rate in the market, which averages about a double, by the way. Takes on average about 2 years, averages about a double, maybe not spectacular compared to your 10-bagger drill hole. But most of the companies actually succeed in building their mines who start out in it. So I love that. And if I don't care if it's bull market, bear market, any market, if I see a really good project that they've got the money, they got the permits, the shovels are hitting dirt, and nothing stops this train, to quote Lynn Alden, I like that a lot. So that's, something like that, it doesn't matter. But to your point about strategy, instead of an ideal company or place on the Lassonde curve besides that, I would say I have a kind of barbell approach. And it's not a real barbell because I'm not, taking, gold stocks and then something completely different like biotech or I don't know, Amazon. It's within my mining stocks because that's what I know. And my barbell is a couple of the blue chips, the biggest and the best in the space that will give me leverage to the underlying metal and are relatively low risk. And then some of the juniors that give me that hockey stick potential. Because I am still at that stage in my life where I'm looking for capital gains. I'm more in the wealth generation than preservation phase. If that weren't me, I would not do a barbell. I'd probably just look for the big ones, right? And the royalty companies. But I am looking for capital gains. So this is my barbell approach. And it's a little bit of a mixture.
Thank you for that, Lobo. That was actually one of my questions further on about the portfolio structure. So we got that one answered. So let's move to silver, Lobo. Are you as bullish on silver as you are with gold, or this possible slowdown economic issues could prevent you from going all in?
Well, several threats. One, I never go all in because it's nobody knows for sure. Strange things happen. I mean, just recently, the United States bombed Iran over a weekend. And you would have thought oil is going through the roof on Monday. If I wish I could buy oil, I mean, it's like guaranteed. How could oil not go up? The Straits of Hormuz, all that stuff. And what happens Monday? Oil drops $6. So I never go all in. I'm never that sure. And I want to have at least, some cash there besides that, I can make a mistake. I always want to have some cash in case a truly once in a lifetime opportunity comes along. And if it's fast moving, say it's a private placement or something like that, that's getting filled up quick, I want to be able to act. And if I do, obviously at that point, then I'm all in and I immediately, sell some blood, have a garage sale, do something to get some more cash because I'd never want to be illiquid. I never want to be unable. I mean, a once in a lifetime opportunity doesn't happen twice in a row. But if by some statistical fluke it did, I borrowed somebody else's lifetime, I would want to have that cash. So sorry. For silver, the issue with the potential for near-term headwinds, which I do think it shares with copper and other, because people get mad at me when I say this, but silver's industrial side is important and it's obviously large. And yes, silver is still money. I'm not denying that. I'm just saying it also has this large industrial component and you ignore that at your own peril. But that doesn't make me less bullish on silver. It just means that if there is a buying opportunity, it's something I want to take advantage of. And, our friend Rick Rule likes to say, I buy gold out of fear and I buy silver out of greed. So when you say, am I more bullish on silver, then the answer is yes, I agree with Rick. And the history tells us that silver is more volatile than gold. By the end of any, gold, silver, monetary metals bull, silver always outperforms gold on a percentage gain basis, at the end of the day. Well, except 2020, but if we write that off, it's a 90%. It's still worth betting on. That trend is worth betting on. And by the way, I had a lot of people who got all excited about silver, $39. This is off to the moon. It's woo. And my thought on that was, be careful what you wish for, because if this is the proverbial where silver more than catches up with gold and it goes into its manic phase, that's the end of the cycle. So if you're wishing that this is that silver is going to the moon right now, you're wishing, at least statistically, for the end of the cycle. And I don't think we're there yet. I think with all these things that we talked about with the macro, the money printing, the monetary and safe haven demand that would affect silver as well as gold, and the industrial side, which will be bullish for silver more than gold. And I'm very bullish on silver going forward. I'd much rather see an orderly climb than a vertical, silliness that then gets instantly unwound. So what I'm saying is, yes, I'm bullish. Yes, I think there's also potential for silver to correct from here, but I'm not actually I think that's more likely in copper than silver, because there's something interesting going on with silver, and people like to say, oh yeah, silver bulls, yeah, silver 39, there's no resistance between now and 50, it's going straight up, while ignoring the fact that platinum is up twice as much this year. And palladium, when silver went to 39 that day, palladium moved even more that day. So other expensive silvery metals are moving at the same time. Now, you can ignore this if you want to. If all you care about is silver, knock yourself out. But as a disciplined speculator, I have to look at the market and say, look, this is not just a silver story. There's something else going on. And those other ones, whatever else you may think about them, they are industrial minerals. I mean, nobody even knows what palladium looks like. I could have a palladium ring and people might think it's platinum. They might think it's silver. Nobody knows. Forget about rhodium, right? But they all moved at the same time. And by the way, gold didn't move at the same time. So people who think, oh, it's about money printing and de-dollarization or whatever, well, that doesn't fit the data, because then gold would have moved at the same time. So this big move by silver now coincides with other silvery industrial metals, which makes me nervous about how durable it is. Let me be clear. I am not saying the next big move in silver is down. I am saying it is risky to assume the next big move in silver is up to 50 and beyond.
Yes, 100%. And similarly to gold, even if we have this side move for a certain period of time, that's very good for all the producers and miners as well, because at the current price, they're also printing cash. Again, all the good ones.
Yes, no doubt. For the actual business, even exploration and development, if a year ago you would have been irresponsible modeling your deposit at, say, $2,000 gold. Now, the 3-year trailing average, the industry recognized, conservative approach, is between 21, 2,200. So, I mean, it makes my whiskers twitch, my wolf whiskers. Lobo means wolf in Spanish. My wolf whiskers just go bing when I see a $2,000 or $2,100 gold price assumption in a feasibility study or a pit constrained model for deposit. But that's $1,300 below where we are right now. So it's not a crazy number. So yes, I mean, for the business, anybody that isn't making money at this point, I mean, okay, if they're putting all their money into some growth project and so the free cash flow is going away, but that should be capitalized. You should still be able to deliver to the bottom line. Anybody that's not making money at this point, you really need to ask yourself whether this is a stock you want to own. And by the way, this applies to silver too. Silver mines, the current crop of silver mines, they were all built around a $15 plus or minus assumptions and things, maybe aggressive ones 18 or 20. So where we are now, unless you have to be a crappy silver miner not to be making money at this point. Sorry, I don't think I'm an anal personality necessarily, but this word comes up because one of Lobo's dictums, one of my principles of speculation is that crap is crap, and higher prices might make a crappy deposit look better for a while, but not really, because then costs catch up. So sorry, but that word comes up a lot in my analysis.
No problem, Lobo. So with uranium now. So when I got involved with the uranium, the spot price was about $25 per pound.
Good for you.
And at the time, it was quite easy, I suppose, to speculate on it because we could see the cost of production, so it made sense. Right now, we are at the point where the spot price is around 70. So some people say, well, it's more difficult to be bullish. But Lobo, if we look at the long terms, that could tell us a different story, the long-term contract. So what's your view on uranium right now, and how bullish are you or bearish are you on it?
So to quote Rick Rule again, I agree with his view that the easy money has been made here. Like, when it was $18 a pound, not to one up you, but it was around 18 when I started to go along. It's like, Rick's thing about either the price goes up or lights start going off in large parts of the world. This was not an if question, it was a when question. With the possible exception, if there was another Chernobyl scale event, particularly if it was in Western Europe or the United States or the developed world, that could derail this thesis. I don't think anything short of that could derail this thesis. Even Fukushima hasn't stopped it at this point. So I think it would take a Chernobyl scale event to cause this to go away. So besides that, and those are very rare. I mean, there's really only been one, because 3 Mile Island was a nothing burger as well. And arguably the Chernobyl event was due to Soviet stupidity rather than nuclear technology per se. Anyway, it was easy to see at that point, it's got to go up. We just, now it's 70, close to 80 as it was. Spot is below that right now, but the long-term contract price is held just under 80. That's close to the incentive price that industry insiders have been saying for some time is necessary to bring new supply online. And in fact, we are seeing that. The low-hanging fruit is being picked as you and I speak. Mines have been built, have been refurbished, old ones have been ramped up. That's happening now. So I think it's reasonable for the market to have taken a pause. Uranium spot went up over 100, and I got a lot of rotten tomatoes for saying it was likely to correct, and it did. I think that all made sense. That was all reasonable. You went way over the incentive price. There was obvious low-hanging fruit to be picked. The market was not wrong to be cautious about that. But now I think the market has become overly cautious. Like it reminds me of 2022. I'm a 1900s wolf. But in 2022, people were just hating on uranium because it hadn't done anything for 9 months. What's wrong? That meme of the stick character, with the stick poking uranium. Come on, uranium, do something, right? That was the vibe at the time. And it feels like that again. And of course, what happened after 2022, 23, it doubles, right? It goes up 100% a year. I'm not promising another 100% gain here. I'm saying that, in those market circumstances, there is opportunity. And, the recent rally we saw, uranium carved out a bottom, it went up. There's been a lot of interest. So some people have gotten on board. That what I'm saying, I guess, is obvious enough that it's not easy here. But again, for a stock picker, there are opportunities here. And the missing piece, what I haven't said yet, is that this low-hanging fruit picking, it's not going well. Almost everybody is delayed, over budget, behind schedule, cutting production as they ramp up slowly, less than, and some projects are just not happening at all. So while the market was reasonable before, I think, to worry about low-hanging fruit, high prices curing high prices, I think it's unreasonable now to think that that's a problem. It's clearly much more difficult to get back into production than it was before. And that low-hanging fruit thing is not an issue. Or rather, it's not a market killing issue, let's say. And the supply-demand gap is just, going forwards, it just gets wider and wider by everybody's yardsticks, not just mine. You look at Wood Mackenzie or whoever you get your data from. The demand scenario just keeps growing and growing every day. As you and I speak, the biggest recent news was China not just saying they were going to double their reactor fleet, but double it by 2040, which in terms of nuclear builds is around the corner. And the US has approved, small modular reactors, and there's one finally getting going in the US. The Chinese already have one, right? The Canadians are farther ahead. The US is finally getting, even Germany has talked about, well, maybe we need to reconsider nuclear, right? This is an idea whose time has come again. The demand scenario could scarcely get better, but somehow it seems every day there's some new announcement that makes it even better. And the supply is not coming online as feared. Even the world's biggest and lowest cost producer in Kazakhstan, they're hitting their production, they've ramped up and they're hitting their production guidance because they lowered the guidance. They moved the goalposts, right? So in a world where that happens to the biggest and lowest cost producer, I'm just not worried about supply. And as a fundamentalist, never mind the charts. Just the long-term contract price is held up. And this gives, again, give credit where due, Rick Rule goes through this very clearly. This gives this industry clarity on future pricing, way out, years ahead, in a way that other industries don't have, which you can literally take to the bank to get your projects funded. So I really like the uranium space. The one fly in the ointment would be the recent rebound in uranium has lifted a lot of the ships, the ones that I like and might have bought. And we've recently seen a bit of a correction, perhaps coincidentally, starting around the time Jim Cramer said, buy everything uranium. But the stock prices haven't corrected with it. The spot prices has been quite volatile, but it hasn't resulted in stock volatility. I want to buy low, sell high. So I'm looking for that. I'm very excited to hopefully have another buying opportunity here. But if not, I'm happy to be long, and I'm looking forward to whatever happens next.
Yes, I'm very excited about uranium as well. And it's one of those places where if you try to pick the right companies and stay calm and disciplined over the long term, you don't have to be, you don't have to do anything crazy. You will get your rewards by just staying patient, I believe.
I agree. And not to name names or give out free stock picks or anything. No, this is the opposite. But let's just say the largest uranium play easily available to Western investors, North American investors, was just a couple months ago at a 52-week low because of this, I think ridiculous market overreaction. And now it's returned to all-time highs. Actually, I think, it's hit new all-time highs in just a couple months. So good things come to those who wait. And if you make a practice of buy low, sell high, and you buy the best of the best when they're on sale, which for whatever ridiculous reason happens from time to time, I think you'll do well.
So Lobo, just to keep the same theme. So we talked about a lot of different opportunities that, people can get involved in. But if let's talk to a young person who's still at the start of their wealth building path, they can hear, people talking about buy Bitcoin, buy Tesla, buy Nvidia. We're talking about, possibly buy silver, buy gold, get involved in the commodity sector and stay patient. What would be your advice to that individual who just wants to get started, but maybe he or she has too many options?
Well, if they're watching this, they're probably not as allergic to, boomers, old, Stone Age commodities. Actually, no, Metal Age. Um, but if you're watching this and you want to share this with other young people who may be not as enlightened as you, my point would be, if you made money on cryptos, congratulations, that's great. You can do that in other areas. Why put all your eggs in one basket? And buying Ripple as well as Dogecoin or what? That's not diversification. Not like I'm talking about. There's still, speculative cryptos. So have a completely different basket. And, what if something happens and you're wrong about your thesis? Well, then this other thing can do well despite that. So I think if you've gotten the bug, if you've made some money, if you want to be a speculator, a successful one, not just somebody who got lucky following the herd at a time that it happened to work out, but one who consistently makes money over time, then you should diversify and look at what else has the wind in its sails. What other trends are investable now? And for the reasons that we started this conversation with, I do think commodities are a mega trend that will have, with careful selection, many money-making opportunities for years and years to come. So I do think people should look at that. And the other thing I might add, and again, anybody watching this already maybe doesn't need to hear this, but if you're going to share this with your friends, investing isn't something for rich old guys to do. It's not something that you have to have, decades of experience before you even think about. Okay, if you go into it young and naive, you'll make some mistakes. But that's education worth paying for. That aside, you really want to wait 40 years to take advantage of what could be life-altering capital gains? No, and you don't have to. And even more, if you're 19, got no kids, no responsibility, and you put all of your beer and pizza money into some stock and it goes to zero, you lost it all. Guess what? It's no big deal. You dust yourself up, and just try again. So there's very little downside to a younger person to give this a go. The very least you get, I think, is a very valuable education. And the upside is potentially huge. If you're feeling FOMO or you didn't make any money on cryptos and all your buddies did, I'm not saying there's no more money to be made there, but that was then. Today is now. I think you should look at other trends, such as what you and I are discussing, Vladyslav.
For sure, Lobo. Thanks for that. And before we wrap up, Lobo, I would like to ask you, what excites you the most right now? So it could be a certain project, it could be a certain sector, could be absolutely anything. But what's on your mind?
What you didn't plan this, you didn't tell me you were going to ask that, so I didn't have a planned answer. But what came to my mind right now is actually Argentina, and on multiple levels. And I'm not saying Argentina is now perfect; it's perfectly safe. Go put all your, don't go all in Argentina. That's not what I'm saying at all. But you haven't maybe the most pro-government business in the world. Sorry, pro-business government in the world right now. And Milei still has 3 more years. And if he can continue, he doesn't have to turn around the economy. He doesn't have to hope for improvements. He's already made improvements. He's taken inflation down from 300% down to, normal inflation levels in other countries. And he's working on these things. He's not perfect. He has not kept some of his promises. I'm not a fanboy here in that sense. I'm just saying, though, that what he's doing is historic. It has already had results. He's very pro-business. And for my world, he's pro-mining. They have tax incentives in place right now. And there's enough time. If you've got a project that's shovel ready and just wasn't going anywhere under the previous government, now is the time, because this government will do it. And you have enough time to build your mine under this government. So within my own wheelhouse of metals and mining, I'm really excited about Argentina. But also as a human being, I'm looking at Argentina, which, if it's successful, will be a shining example to the rest of the world of what it can mean to really pare back government and unleash the power of free enterprise in the individual versus the collective. I think that's not just economically, but sociologically and as on a human level. I think this could be the most exciting thing happening on the planet right now. And by the way, I don't see Trump in the same light, but Trump's got 3.5 more years and he's pro-mining. He's explicitly pro-nuclear, which is pro-uranium. And so you can love Trump or hate Trump, doesn't matter. What I'm saying is this has investable, investable consequences now in the United States as well. I'm much more excited about Argentina, but I just had to be, fair is fair. I have to say, this stuff people, oh, it's just the United States, or it could be reversed if the next president, overturns all these executive orders. All that's true, but in 3.5 years, you can build a gold mine, or you can go through the permitting process for a big mega project that had no chance before.
Thank you very much for that, Lobo. So before we wrap up, do you have a final word for us?
Final words would be the initial word. I think, to make volatility your friend, I think you have to expect it, prepare for it. We don't want to be all in, right? We want to have a pile of cash ready to make volatility our friend, but you have to have courage. And you have to, when other people are freaking out and jumping out of windows, be willing to buy when there's blood in the streets. I mean, consider, for example, back in the COVID crash, when oil briefly went negative. Like that, I mean, you could be anti-oil all you want. You could love windmills and solar power. You could be Greta Thunberg's twin. But the money-making opportunity when oil went negative, I mean, that was impossible to stay. That had to go up. So being prepared and having then the courage to act when something gets stupid cheap is the basis of making volatility your friend. And sorry, just one more quick point. How do you get that courage? Is it just genetic? Well, some people maybe are more like that. But I think the biggest way to bolster your courage is to educate yourself. When you know something, if you know something about nuclear, if you know something about the oil market, if you know that oil prices can't stay negative, it doesn't actually take that much courage to jump in.
So guys, if you're interested, Lobo has a service, Independent Speculator. It's a service that I have been using myself, so I've been a paid client for several years, and I highly recommend it because Lobo does work really hard and he analyzes a lot of companies, and it's a very, very good value. So Lobo, thank you very much for being here.
Thank you, Vladyslav.